So everybody welcome, and we are starting the webinar now. So as you all guys know that this webinar will be on technical analysis in markets. So during the webinar you all will be in mute mode, and if you have any queries you can send your queries via the chat option at the end of the webinar. So now let's begin the webinar. So let us introduce about ourselves, who we are. So we are basically from Edd Fin Learning Solution. So this company is basically into providing practical training and learning solutions in the financial markets. The solutions we provide for investors, it could be new or an existing investor, it could be a trader, it could be a stockbroking employee, a relationship manager, dealer, branch manager, etc., an advisory employee, sub-broker, professional, student, housewife, CACS, employee advisor of a bank or mutual fund or insurance company, or anybody who wants to learn financial markets can come to us and join our courses or webinar. So we also provide corporate training solutions. So the training solutions is basically for stockbroking companies, mutual funds, banks, etc. If they want their employees to be trained, or they want their investors to be trained, or they want their sub-broker or business partners to be trained, so we conduct training sessions for stockbroking companies, for investor, employee and stock sub-brokers. We are also into e-learning modules. We create e-learning modules on financial markets. We do webinars, we do content development on website, social media marketing, e-learning module, content development training, and some market intelligence newsletters. So about the webinar, why the webinar is being done. So as you guys all know that markets are very volatile, and with the use of trend analysis only, a trader can make money in both rising and falling markets. So if you want to make money, you should know what trend the market is into, what is the technical analysis of the current market, and then how to play in the market. So anybody who wants to learn trend analysis or technical analysis, very much welcome in the webinar, and we'll be discussing about these things in this particular webinar itself. So basics of technical analysis we'll be covering, trend analysis, some pattern, indicator, practical use of technical analysis, and your queries will be taking. So why analysis? So the first of all, let us understand and let us see why exactly do we need analysis. So the basic reason of analysis is that markets are full of uncertainty, but trends do not lie. So as you know, analysis will help the trader to put up proper stop loss and reasonable targets in the market. This is how a technical chart would look like. So this is a technical chart, as you can see, stock chart and the share price and time period, which is in the bottom line. So as you can see, this is how a chart is being formed. A volume panel is nothing but a panel which shows the volume on that particular trading day. So you must be seeing some big volume sticks, which means that the volume is rising on that particular day, trading day. So I hope my voice is clear to everybody. If my voice is clear, you can just write yes in the chat option and send. So I'm pretty sure that the voice is clear to everybody. Okay, so I've received some confirmations. Okay, great. Right, thanks. So let me move forward then. So if somebody is having a voice problem, they should check their internet connection, because the voice is although clear from ourselves. So if you have some problems in the voice, you should check your internet connection, because we are getting some comments that the voice is very clear from somebody's side. So please check your internet connection, and if you have any unused application or website running on your website on your PC, please do close those websites or application, because that will be taking your bandwidth. So let me move forward. Okay. So types of chart: line chart, bar chart, and candlestick chart. So this is how a line chart works. So these points indicate that this is the closing price of that particular stock on that particular day, and a line chart is formed by joining the closing prices of that chart for that particular day. This is how a line chart is being formed. So this is a very simple form of chart formation, which is known as a line chart. So this is how a bar chart is formed. So a bar chart is nothing but a bar represents the trading session of that particular day. Open, high, close, and low. And if the close is lower than the open, the bar would be red color, or vice versa would be green color. So this is how the bar is. As you can see, this is the bar chart, a real practical bar chart in the markets, representing the high, low, open, and close of the stock. So this is how a candlestick chart is being formed. A green color body is where the close is greater than open, and red is vice versa. So this is how a candlestick chart is being formed. So this is a candle with a middle body and the upper body, which is the upper tick, as we know. So every candlestick chart is divided into two parts, the main body and the upper and lower bodies. So this is the trend formation. So this is how the trend is being formed. Every trend comprises of a peak and a trough formation. A peak is the highest point and trough is the middlest point of the chart. So types of trend. So there are basically four types of trend: rising trend, falling, stable, and volatile trend. So in a rising trend, as you can see, the chart makes higher high and higher low formation. So every high is higher than the previous high and every low is higher than the previous low. So falling trend, it is completely opposite. So every low is lower than the previous low and every high is lower than the previous high. So this is stable market where peaks and troughs are almost at the same point. This is a volatile trend where there is no clear indication of the trend of the chart. So now let's understand what is support and resistance. So support is a point where the stock stops falling. As you can see in the chart, the stock has taken the support two times at the same level, which is 255 rupees. So this is known as a support point. So as a support point, as the name suggests, it gives the support to that particular stock and stops that stock being falling further. So resistance, as you can see, so resistance is nothing but a place or a price point where the stock sees resistance and stops falling. So now let us come to how exactly can we use trends to check which kind of trend is there in the markets. So as you can see, this is the trend line. As you all know, trend line is formed by joining the highs or lows of a particular stock. As you can see, this is the resistance trend line. So resistance trend line is formed when we join the peaks of a particular stock. This is known as a resistance trend line. So let us see what a support trend line is. So support trend line is nothing but when we join the supports, and when the stock breaks below the trend line, it is known as a breakdown or a sell signal is being generated. As you can see in this particular chart, the stock was somewhere at around 700 rupees when the stock broke from the trend line, and it moved all the way down to 450 rupees. As you can see here, it was somewhere at around 750 rupees here, 700 rupees, and it broke till 450 rupees down when there was a sell signal generated on the chart. So now this is an angular trend line. An angular trend line is always in a particular angle. It could be a rising trend line or it could be a falling trend line. So this is an angular trend line. The trend line could also be according to the duration. So this is the main or long-term trend line. So long-term trend line can range from 2 to 20 years. It depends on how long that trend line goes, but it can range from 2 to 20 years, a long-term trend line. So if you talk about Nifty, so the long-term trend line is still bullish. So these are some short-term trend lines. So short-term trend lines are nothing but trend lines formed for a very short period. Okay. So as you can see that this is the short-term trend line. So short-term trend line is a trend line which is formed. It could range from a week to 3 months. So that is known as a short-term trend line. A trend channel. So as you can see, this particular stock, this was in a trend channel. So the bottom line was basically the support line, and the upper trend line was the resistance line. So every time the stock hit the resistance line, it retraced back from the resistance. So this is known as a resistance trend line. Now head and shoulder pattern. So head and shoulder pattern is a pattern which is formed when there is a head and shoulder pattern formed on the stock. So as you can see, a head and shoulder pattern consists of three different parts, which is the left shoulder, head, and the right shoulder. So the left shoulder is nothing but a place or a formation which acts as the shoulder. It forms, it makes a top, it retraces, head is higher than the left shoulder and right shoulder, and the right shoulder is the point where the breakdown happens. So as you can see, this is the sell signal. So when the stock breaks below the sell signal, it is a confirmation sell of neckline breakdown. So this is the practical implementation of head and shoulder. As you can see, this is a stock where there was a left shoulder formed. As you can see, this is the left shoulder, this is the head, and this is the right shoulder, and this particular point was the breakdown, and the stock fall from the distance the stock will fall will be equal to the distance of neckline to the top of the head. It was 57 rupees, and the same fall happened for 57 rupees. So as you can see, the distance between the neckline to the head is exactly the distance between the neckline to the target of this stock. So inverted head and shoulder is simply opposite of the head and shoulder pattern, where it is generating a buy signal on the chart. So there is a left shoulder, head, and another right shoulder. So let us see an example. So as you can see here, this is the left shoulder, this is the head, and this is the right shoulder, and this particular point is the breakout from the stock. So as the stock broke up from the neckline, it gave a buy signal, and it was exactly the same, or in fact more than what was the expected target. So although some guys who are very new to the markets, or some guys who are listening these things for the first time, they could be a bit confused on what exactly head and shoulder and these patterns could be. So although you cannot learn technical analysis in one webinar, it needs a complete practice and regular practice for days to learn the technical analysis, and that is what our e-learning course on technical analysis is. We have a e-learning course on technical analysis. So although this webinar is a very short webinar just to introduce what a technical analysis, but the guys who are really interested in technical analysis can opt for our technical analysis course also. So let us move forward. So this is a flag pattern. So flag pattern, let us see a practical implementation. So as you can see, this is a flag pattern, and a flag consists of a pole, flag, and a potential target. So this was the flag pole, this is the flag formation, and this is the potential target of that particular stock. So this is how it is done. So whenever the stock is in a range or is in a accumulation or a distribution phase, it is known as a flag formation of that particular stock. So now let us move towards some indicators. The first indicator is known as Bollinger Band. So Bollinger Band is nothing but a band which is formed on the stock. It is more or less an overlay on the stock, wherein you can see a band formation on that particular stock, and that band acts as a resistance and support line, or a bias or buy or sell signal for that particular stock. So when the stock touches the upper line, it is more or less in the overbought zone. When it retraces from the upper band, it starts falling, and vice versa on the lower band. So another indicator which we are discussing today is CCI, which is Commodity Channel Index. So although the name is CCI, Commodity Channel Index, but then it can be used in every kind of stock. So initially it was introduced only for commodities, but now technical analysts have modified this particular indicator and tried using the same indicator in equities also, or currencies also. So this is a CCI indicator. So as you can see, the CCI indicator moves from -100 to 100 line. So that is the range for that particular indicator. Whenever it breaks below the 100 line, it gives a sell signal. Whenever it breaks above the minus 100 line, it gives a buy signal. So moving average is a very common indicator. Most of you guys must have heard moving average or daily moving average, daily exponential moving average on television, on charts, or maybe on some technical reports. So moving average is nothing but an average, and it keeps on moving. So let's say there is a short-term moving average of 7 days. So every day that moving average keeps on moving. So let us see this moving average. So this is a simple moving average, which is giving a buy or sell signal. So whenever the stock breaks below the moving average, it gives a sell signal. Whenever it breaks above the moving average, it gives a buy signal. So these are multiple moving average. We have used 7-day and 21-day moving average out here. So whenever the stock breaks above both the moving average, it gives a double confirmation and vice versa. So we are also using moving average as a support and resistance. So whenever the moving average, the stock is below the moving average, it acts as a resistance, and when it is above the moving average, it acts as a support. We have used a 35-day moving average out here to show you how a moving average can be used as a support and resistance. So RSI, which is a relative strength index. So RSI is basically an indicator which ranges from 0 to 100. So when this stock is above 70, it is overbought. When it is below 30, it is oversold. So this is how you can generate buy and sell signal. So whenever the stock breaks below 70, it gives a sell signal, and whenever it breaks above 30, as I told you, it gives a buy signal. So, I mean, this was a short on technical analysis, how technical analysis can be used. And many traders and investors argue us that technical analysis is not always fruitful and it is not of any use. But I have showed you practical implementation on how technical analysis can help you make money in the markets. So now we'll be taking Q&A sessions, and now we'll also be showing you some practical charts, maybe Nifty, gold, crude and silver charts, so you can be in a position to understand how the technical analysis is practically used. So let me also share that we have some courses. We have courses in basics in stock market, futures trading, options trading, commodity markets, currency markets, advanced course on technical analysis, option strategies, and mutual funds. So anybody who wants to learn courses sitting at their home, sitting in their city, and they do not want to travel to attend the courses in our course center in Indore, they can sit at their home and learn the courses at their home. We also have a WhatsApp number where you can ping us, and where you can attend. You can join and get regular stock market and commodity market updates, which you all guys know, which is our contact us number 887-150-4428. You can also connect us via different routes. Now your queries. So if you have any queries, you can send us your queries via the chat option, and we'll be more than happy to answer them. Okay, so we have started getting some queries. Let us answer those queries for you. Okay, so first query is can you rewatch this session? Yes, we'll be uploading the video of this webinar in next 1 hour on our YouTube channel. You can simply go to the YouTube and search Edd Fin. So youtube.com/eddfin, that's EDDFIN, that's our YouTube channel. You can watch the same and you can watch it n number of times, unlimited times on YouTube. You can also watch our past video webinar on the YouTube channel. Okay. So another question is how you can use CCI. So CCI is basically a commodity channel index which you can use on any particular commodity or maybe any particular stock. You need to use it in a range. You can simply go to a software. There are many softwares, technical analysis softwares available. You can go to any of the software and use the CCI option. Okay, so technical analysis can be used in option. Yes, it could be used. Okay, so another query is on Trendline. So let me come to the Trendline portion again. Okay, so this is how you can use trend lines in technical analysis. So as you can see out here that we draw a support and a resistance trend line. So the support trend line is drawn by joining the bottoms or the support of a stock, and resistance trend line is used to join the is made by joining the resistance of the stock. So if there is a sell signal, if the stock breaks below the support trend line. So is technical analysis more relevant in stock or commodity? It is relevant in all the stock, commodity, currency, etc. So which is correct to use? Is it a simple moving average or exponential moving average? So you can use a combination of both. If you are a short-term trader, you should use simple moving average. If sorry, exponential moving average. For a long-term trader, it is simple moving average. So for every stock you can follow the charts, but the stocks which have very low volume or operator driven stocks, the technical analysis would not work. Okay, so would every stock does every stock has technical analysis working on it? So as I told you that only the active stocks or stocks which have huge volume have technical analysis working on it. So the charges of our technical analysis course is 3,000 rupees only, and it is for 60 days. You can learn technical analysis online sitting at your home, and it's a very fantastically made technical analysis course which you can learn it from your home. So RSI is basically relative strength index. So RSI is used from as an indicator which ranges from 0 to 100. So when the stock breaks below 70 in the RSI, it gives a sell signal. When it breaks above 30, it gives a buy signal. Okay, so if you want any demo of our technical analysis course, you can just go to our website, go to the courses and go on the demo ID page and you can get the demo of our courses. So we also have a course for commodity markets, which is learning commodity markets. It charges around 1000 rupees and you can learn the complete commodity market in that particular online course. You can also contact on this number, on our WhatsApp number. You can call also and send a WhatsApp, or you can send a mail, and we'll be more than happy to answer your queries on the stocks or on the courses. So now let us see some practical charts, how the charts are made, how you can work on a chart. So as you can see, this is the chart of Nifty. What we have done is we have converted this chart into a weekly chart, and we have used two moving averages. One is 100 weekly moving averages. As you can see, it is a perfect support. This is a practical implementation and updated chart. So all those guys who always ask me a question that whether technical analysis work or not, this is the practical implementation of technical, and this is no magic. This is in front of you. As you can see out here, this is where the stock has given a breakout. 100-day moving average, so which was somewhere at around, I'm guessing 7730, yes, 7730. So that was the point where Nifty started recovering, and it took a huge support on that moving average, and now it is testing 25 weekly moving average, which is somewhere around 8230. So if the Nifty closes any day above 8260 or 8270, it is a perfect signal that the index is now in a bullish zone. Let us also see some more charts. Let me show you some crude oil chart or maybe a gold chart. Okay, so let us see this gold chart. So what we can make out here is that the stock has made a sort of head and shoulder pattern. So let me show you how the head and shoulder is worked out here. So this is a perfect head and shoulder pattern. This is the left shoulder, as you can see on the gold chart. This is the head, and this is the right shoulder, and that counter has given a perfect breakout on this particular point. So this is the practical implementation of an inverted head and shoulder pattern, as you can see on gold. So this was a short webinar from our side. We'll be sending you the details on for the courses and all these things on your number. You can also join us on the WhatsApp page of our company, which is being displayed in front of you. And if you have any further queries, you can ask us. Okay, so another query is what is the charges of option strategy? So it is 2000 rupees for option strategy course, and it is 30 days course. You will learn all the strategy: bull call spread, bear call spread, butterfly, straddle, strangle, etc. So as I see we don't have any further queries, we would like to end this particular webinar now. Thanks everybody for attending. If you have any queries, you can send us via mail, you can call us, or via WhatsApp. Thanks everybody for attending. Thank you.